Hi everyone, welcome back to Be Rich. It's me, Vinod, recording remotely from Singapore. I'm here for another few more days and I wanted to get something out to you before I head back to India. I did read an interesting comment that one of you thought this was AI generated and it's really not me. I can rest assure you it is me recording here with my notes and it is the real Vinod here talking, doing this remotely. This is not some AI generated video. I can rest assure you of that. So today I wanted to talk about Nestle and comparing Nestle India to Nestle Global. If you should be looking at Nestle India or should you be looking at Nestle Global, which one is a better investment or a value investment proposition? And the argument why what my brother has been saying, that if you are looking at Nestle, why you're better off looking at one over the other. Hopefully by the end of the video, you will come to understand what Anand has been saying and maybe agree with him. And if you don't, you can definitely let me know. So the question, preamble or the pretext of this video is, which one should you invest in? India, the debt-free darling, or the global food giant with deeper dividends? Which way should you go? To set the context, the one in India is trading at a massive PE or premium, while globally the Nestle looks like it's in a bargain, right? So let's deep dive into this and look in terms of markets and performances and earnings and see which one should we look at. Nestle entered in India in 1978, and when they first entered, they were 100 owned subsidiary of Nestle Global, but then due to regulations in 1978, they had to dilute 10%, and that's when they offered the IPO, initial public offer. Believe it or not, it was 10 rupees a share back then. I know 10 rupees was a lot in 1978. I don't think it is near where it is today though. Today it's been trading in the range of around 2000 to 2500 depending on the market conditions. I think currently it's around 2400 odd. In the last 5 years it's given 37% return from 1754 all the way up to 2400. So peaking at 2745, and now it's corrected since the 2745, and that is why you see a lot of analysts and investors in India saying that Nestle is at a buying opportunity. I don't agree, but that's their opinion. What is the holding pattern of the one in India is Nestle Global and Maggi together. They own around 62% of Nestle. 10% is held by the FIIs and 11% is held by the DIIs. The public is only trading in India. Retail investors, that's you and me, around 15% of the entire stock available in India is being traded publicly. Globally, the company is very, very old. It started in 1866, of course, in Switzerland. They did an IPO in Switzerland, believe it or not, in 1873. And they entered the American market, stock market, through the ADR mechanism in 1969. The market capitalization of Nestle India is at 2.5 trillion rupees, while globally it's at $278 billion. Like I said, the Indian CAGR in the last 5 years is 30 odd percent, while the CAGR globally is around almost 10% for the last 5 years. So you see the compounding pattern difference. Will the next 5 years again give these kinds of return in India? Begs the question at these current valuations. Recent performance. In India, the revenues were up 4.5%. In the last quarter, the net profits were down by 6.5%, and the domestic sales has recorded an all-time high for them. There has been weakness in margins and the cost for the inputs of these materials. Globally, the growth has been at 2.8%, and they're primarily focusing on pet care, and Nescafe and health sciences has done very well for them, globally speaking. But the tariffs and the pain of tariffs and the slowdown in the US has been hurting them in the US. Though globally speaking, US probably makes around a little more than a quarter of their complete volume of business. In India, it is considered debt-free. But I know some of you will go look at the screener and come back screaming at me saying, no, the liabilities in the last year has shot up. Vinod, what are you saying? It's not debt-free. Well, something happened in India in accounting. There was a AS 116 rule which was passed. So basically what it said is anything that you have as a rental expense in your balance sheet has to be reconfigured as a loan or a debt. And when that happened, Nestle's all its lease and rentals got switched over to debt. That's what's now called lease liabilities. Lease liabilities of all those are which is not owned and rented. They are expanding in India, so those capacity expenses have all come as leasing liabilities. So it's like taking your rental, what you're paying as a rent, and writing it as a EMI. This is the simplest way to explain that. So the company is still solid, it's still low risk, and it's a great brand in India. Even if you look at the balance sheet suddenly and see a huge spike in its debt, it is pretty much debt free. In India, the free cash flow stands at 229 crores and the interest coverage is at 37 times, and it's generating a lot of healthy cash. So India is doing great that way for Nestle. Globally, there is debt. The debt to equity is at 1.7 and the free cash flow is at 10.6 billion Swiss francs, and the interest coverage there is also good at almost 11 times. So here, if you look at it purely in terms of balance sheet, India wins over globally. The Indian balance sheet Nestle looks much more robust than the global balance sheet, but there are red flags in both. The net profits in India have been dropping. India does have a very high valuations in terms of PE, and the PEG is lower than 2 or about 2. While the red flags in globally is the debt, the US tariffs, and the slowdown in the US, but I would say valuation looks very attractive globally speaking, and here I would say global wins over India. So it is 1-to-1. Value, let's compare valuations. In India's PE is at 75 times, while globally it's at 16.5. Price to book, India stands at 58 times, while globally it's at 4.5. Dividend in India is at 1.09%, while globally they're giving a whopping 3.46% globally. So here I would say globally it looks far better. Yes, it might be slow growth, but the dividend compounding which is happening there and the current price it's available at in terms of price to earnings is much cheaper than India. While in India, the Nestle looks like a luxury FMCG brand. That's where India and globally stands in valuation. So here globally I think wins. So it's 2-to-1. So finally, where do we get into this? We saw valuations, we saw red flags, and we saw how they performed in the last quarters. These are my final thoughts on this. India, great brand, steady growth, and it's debt free. But globally, you're diversified. If you're buying Nestle globally, you're buying a company which is available with a huge footprint across the globe. It's a very old company. It's cash rich globally. And what is most critical is it's amazingly valued in terms of price to earnings, and it pays out great dividends. In India, it's too expensive, but it's great in India if you're looking at a defensive portfolio. Maybe you can hold on to it. I don't know. I would still not look at it defensively, but a lot of people argue this. A lot of analysts and traders will say it's a great stock to hold defensively in volatile markets. So if we're looking at it in India defensively, there are other great companies, FMCG companies, which are available at a better price defensively if you're looking at it. Globally, it is at a great value. So what would be my final advice to you? If you're looking for safety and you want to be domestic in India, I guess you will have to look at Nestle India only. But if you're looking for a value compounder and you're looking for something that gives dividends and gives you global exposure and something that is at a great entry point right now, I would say Nestle Global makes a lot more sense than holding Nestle India. And this is my views on this. I would love to know what you think. Are you holding any Nestle globally? Are you holding Nestle in India? Or are you planning to buy global? Are you planning to buy in India? What are your views on this? And I would love to hear you. And maybe tomorrow I'll talk about Unilever like that, because Hindustan Unilever is another one. A lot of you have been arguing with me, saying that considering everything put together, that we should look at this as a defensive stock. Maybe Unilever globally is a better bet than Nestle. Or if there's any two other companies you would like me to have a dive at and have a stab at, put it up down below in the comments and I'll definitely look into it and get back to you on it and give you my views and my brother's views on what we think, if you're right or wrong, or if we agree or not with your views. I hope you found this video informative and entertaining as always. How do we invest? Me and my brother invest in American markets through IBKR, and that works for us in terms of how much money we have to invest and the cost involved in investing. It's a great company and a brand we work with. What are you using to invest in the US? Let us know below. Other people can read those comments and maybe find some tips or some wisdom in what you're doing. Other than that, I can't think of anything else to say other than join me on Instagram. I'm talking about Indian companies on Instagram. Those of you who do miss us talking about Indian stocks here. And nothing else more to say. Have a wonderful day tomorrow. I hope you did manage to do some tiffin coffee investing. I have not done any investing. As I'm recording this video, India is still sleeping. Once I do my investing for the day in tiffin coffee, I will definitely give a shout out on Instagram and on WhatsApp saying what I did manage to buy today. I hope you did do some investing today though. If not, tomorrow's another day, another opportunity. Do take that opportunity to invest something in tiffin coffee range. As we chug along through this year, we're almost through May, we're entering into June, which will be the halfway mark for this year. Then, before we know it, we'll start rolling down the hill towards December, and we'll be back again for another year, in year 2 of our 10-year long challenge which we are doing. I hope you are doing great out there. Nothing else more to say. Good night.